All right, so we're going to get started here. We're going to keep it nice, simple, and concise. I know a lot of people out there, sometimes I go a little quick because, some of this stuff, becomes second nature to you. So I'll make sure I do it, really nice and slow for those of you who couldn't make it to the webinar. Make sure you guys can make it to the webinars. It's every Thursday at 6 p.m. EST. Every Thursday at 6 p.m. EST, we will start rolling. We usually send out a alert to let everybody know, hey, send out your emails to one of us, whoever's running the webinar that day, to be in on the webinar. But yeah, so we're gonna get started. So the first thing we're gonna go into is covering essentially the Fibonacci, how to use our FFC method, which is Fibonacci forms and catalysts, and then we're gonna also throw in the Ichimoku cloud at the end, just to kind of wrap it all together. Now, I'm not going to go too in depth on the Ichimoku cloud because by the time we get to that point, you're going to be overbogged with information. So I'm just going to run the FFC method by you. And if you want to learn more about the Ichimoku cloud, contact me and then we can chat about that. But without further ado, the first step in our FFC method is obviously our Fibonacci. And the way we do that is by going to our 4-hour time period chart interval, and we take a look at the pair in an overall time sense. We want to get a bigger picture of where the pair is going, where the pair's been trending, where the pair's trading, some key levels, etc. And if you're looking at a 15-minute, you're not going to get a good representation of what's going on. You're not going to get, a solid representation of how the pair is actually moving. You're going to be looking at, what's going on in the short term. Now, right now, AUD USD, we're getting ready for a few big numbers coming out. We've got a few RBA things that are coming out. We got a few different news events today. We got a monetary policy statement coming out. So we have a lot of things to be getting ready for on the Australian dollar, US dollar. And you'll see, myself, I've been, taking this short with a speculation method that I use personally that I've been testing out. It's looking like, it's working all right. We're only about, we'll say, roughly 40 pips. Let me make sure we get an exact number for everyone. Roughly, 80 pips, away from our current price. Right now, though, we're only 50 pips. So it's working pretty well. We're looking to take this short, but the overall that we're looking at right now to depict that was going short is this trend here. Because obviously, if you're looking, from May 29th until August 10th, you can see that this pair has been trending upward. Now, we'll draw on our trend lines and we can see, a clear uptrend here. That's supporting, that's not breaking. We can see that this is a clear uptrend. However, if we go back, we can see that there is a previous peak, that previous resistance right up around this level here, right around the 7,850 area, right up here, that has not been broken yet, and that we're heading toward. So that's our next area of interest. We can see obviously there's a couple interesting levels here as well. We can see a level there, and we can also see a level here that we'd like to look at for this pair to drop from. So right now, if we wanted to call it, we'd say, okay, this is an area that we're looking to take this pair short in again. Now, it's always, a good idea to scale in. Here we scaled in very small with, 3 standards, 1 standard, 2 standards, 3 standards. So we scaled in very small for our account. And once we get up to this area, that's when we're going to really start throwing, 1.5, 2.0, etc. Now, if you're on a $1,000 account, $2,000 account, you're not going to be trading multiple standards like that. Obviously, you're not going to trade 3 standards just to scale in low and then come up top and throw 6 standards and you'll be 9 standards overall. You're not going to do that unless you've got a sizable account. Now, what we're looking to do is take this short, and what we got to look at is the Fibonacci. So we'll come in with our Fibonacci retracement tool and see what are some key levels that this pair has to hit before we're calling this, a downtrend. So we come in right here, make this a little thinner so we can get some exact points. I'll make this, make it not peached out, definitely blend in with the background. I'll make it red so it pops. Put in the 23.678. All right. And we can see, right here, 78.6 is, what we just essentially came back after. But when we start to come up beyond one of these levels, that's when we're going to look to see, okay, what would be a reason for this, what formation do we see forming? What, from this Fibonacci, after the Fibonacci, we're looking for what formation that we see, forming right now. And we can see a wedge forming an upward facing wedge forming right now. And with the idea in mind, obviously you have to take into account that there's a big news event coming out later right here with the official cash rate and also the monetary policy statement coming out right one after another at 1700 hours. That's 5 p.m. Eastern Standard Time. So those two news events right there are going to be what really catalyzes, which leads me to the last part of that, the FFC method, which is the catalyst. So the first part was the Fibonacci. We came in and we say, okay, right now we're around that 78.6. The second part is the formation. We can see that this is a rising wedge. We see that, if we bring this to the hour one, we can see, we can see that this is a rising wedge right here. We can see that the price is, consolidating upward. And when you get consolidation, that's usually indicative of a breakout. And breakouts, obviously this consolidation right here, this was a falling wedge and we saw that pop. We see a rising wedge and we see a drop. But this overall, right here from here, the entire duration of this black line, this is what we're looking at right now. From this point to this point, we're looking at to see, okay, what exactly is the formation that we see forming? And with that, we can see that this is a rising wedge. And from a rising wedge, just knowing about these formations and knowing how things move, we can see that this here is actually getting ready to drop. But obviously, before this big news event comes out, we had to see the opposite. Usually that's what you'll see is the opposite happen before a big news event, because what they're trying to do, and what I mean by them, are market makers and big players in the market that make money from others that lose money. They're making money from us going in long through this, from July 26th all the way until now. They're making money from people that have been seeing this pair increasingly rise and continue to buy on these pullbacks. And what's most likely going to happen, what we're speculating, is that we're going to get a drop from around this area down to about here, right in this area here, right where we were actually selling. And what we understand now is that from where we were selling here, all of this that happened over the last, we'll say, 12-ish hours or so, this was all really noise to get that last leg, because obviously everyone and their mother is going to be buying once you get a break of this resistance right here. And obviously, if you're in the hour one chart, you're not going to see that there's a previous peak that has to be taken out. So what we're seeing here is, that many people are going to start buying just because it popped above this level. And you can see now that the price is starting to create a top. And what we can speculate is that we'll most likely get a move to this area. Right after we get the move to this area, from now until 5 p.m. EST, we've got about 7 hours until that happens. We're going to get, most likely, right before that event happens, a nice spike to the high just to take out those shorts, take out any shorts in this area. So we're going to get a spike right back to around this area up here, just because that's definitely going to be what is speculated. That's going to be where most of the people are going to be placing their stop losses once we pass this zone right here. And we're going to get that spike back to this area. And what that's going to do for us is it's going to allow us to get back in short at a better position. So right now we're seeing that the pair is starting to increasingly, decrease. With the news coming at 5 p.m. EST, we're going to come in around 4 p.m. EST, so in about 6 hours from now, and start looking at these charts and saying, okay, what's the move that this is making? This is all speculation, obviously. We're not saying this is going to 100,000% happen. What we're saying is we're speculating this movement. We're speculating a downward movement to get people short, saying, oh yeah, finally, the pair is losing strength. They're going to continue to take it short. They're going to be like, okay, well, this definitely is going to make an M. Okay, then they see it come down to here. They, oh, well, this is definitely going too far. This is a V-top. Then right as that news comes out, since it's such a high volatile news event and a high impact news event, we'll get that shoot up right back to this area, right to here. Clears out about 60 pips worth of movement. And then you're going to get that nice stop hunt high with a nice wick that looks just like that. And then you're going to get your body to form. And that body's going to come right back down. And it's going to take all this out. I'm pretty sure a lot of us have seen moves like this in the past. And this is the reason these moves happen. The reason these moves happen are because people are buying. Right now we can see that these buyers are starting to lose a little strength up here. You can see that they were starting to lose a little strength here. Took back, came up. We're trying to regain strength, and they're barely getting. You're seeing a lot of these pins turn to the high. When you start seeing these stop hunts, you start seeing a lot of the market starting to work the short side of things. That's when you can understand that we're going to see some nice bearish movement. But before that bearish movement comes, you're going to see a lot of it. They're not going to just hand it to you. You're going to see those stop hunts back to this level or beyond, just like so, to take out 70 pips worth of movement to get people thinking this is definitely going to rise. And then you're going to see that whip right back down. Moves like this happen. We can see back here, come back to here. You can see a move similar. Where did it go? I just had it up there. Right, yep, right here. Perfect. We can see right here, back in March, we had the pair was trending. We see it break. Obviously people in this area are going to say, oh, this is definitely going to go short. We got a short here. They see this wick right here, and they're like, yep, we're taking this short. They see the gap. They're like, it filled the gap. Now it's going to go back down. Nope, takes it out. People start to buy up here. We get that consolidation up to the high, and then we get a nice fallout back right down to the 7-1 level, all the way from 7.8 to 7.1 for a nice whopping 700 pips. We're seeing that same movement. Obviously, a lot of us have taken history classes in elementary, high school, whatever, and this here is just history repeating itself. That's what this market's all about, and that's what being able to look at these charts is, history repeating itself. We see a nice trend upward to this area that we're actually coming to right now, fallout. Trend. With the news coming up today, with our Fibonacci's telling us we're around the 78.6, with our resistances being really, really close to this area, that we actually tapped one of our resistances in this area here. We're going to get that drop right back down. But before that comes, you're obviously going to see some movement that's going to try to get people to go the wrong way. And what that's going to do is it's going to induce people to take this long, because a lot of people who are looking at this in the 15-minute novice,ly are saying, oh yeah, this is going to pop. This is going. I see a lot of bullish candles. I see a lot of upward movement. This pair has moved from the beginning of August till now. It's moved roughly 264 pips. This is definitely going to pop. But little do they know, there's a big news event coming out today. The official cash rate is coming out. The monetary policy statement is coming out. Tomorrow after, we've got two big events again for Thursday to move the markets a little more. Then Friday, we've got a slew of news events coming out to move this from the U.S. dollar. So these are the things that we need to look at, and this is the reason a lot of you are in the academy, so that you can learn these things and not be a victim of these markets. Because usually, if something is easy, if it looks too easy, right now it's easy to take this long. Right now it's easy to say, okay, let me come in, take my Fibonacci, draw from this swing low to this swing high, say, okay, right now we're going to be approaching a 23.6 at this level. When it gets to this level that we previously indicated that this price is going to go to, then bounce back up, a lot of people are going to take it long. And most likely we're going to get that move right down here between now and the next 4 hours, or next 6 hours, until 4:30, 4 p.m. EST, just before the news event comes out. And then right when it gets to this level, everyone's going to start buying. You're going to see people put buy limits, people buying in instantly. A lot of people are going to start going crazy in this level because they think, one, it's a Fibonacci, two, it's close to a support, three, this is that last area that it broke that was a very serious resistance here. It's a very serious support here, very serious support here. You can see it was a very serious support here. A lot of people are looking at this level as this is definitely where I'm going to get in. And when everybody does one thing, you should usually do the opposite because the market never moves in the favor of the majority. If there's too many buyers, the market's usually going to move to the opposite side because it needs to collect that volume, especially when it's let out so much volume since the beginning of August with 264 pips going long. And you can see that they've been trying to induce the sellers. You can see that they'll drop the price extremely to get people to say, oh, yep, this is the time. This is definitely the time that's going to drop. You can see it happen numerous times, and then the bulls take right back over. You can see it happen over and over again. And there's only a matter of time until you'll understand that trend is about to, lose its strength. And that's what leads me to the last point here. So with Ichimoku, the way it works is you've got a few different indicators. You've got a few different indicators built into one to make one indicator. So a lot of these indicators are SMAs. You've got span A and span B, which are an SMA that produce a cloud. But essentially what it is the Tenkan-sen line is a 9-period SMA. And what it's based off of is 9 periods based off your chart interval. So if you've got this set in the hour 1, it's going to show you 9 hours. It's going to show you a 9-hour EMA. Kijun-sen line, 26-hour EMA. Sunoku line, a 52-hour EMA. This is the color scheme I usually use because this is what I'm used to seeing. I go blue Tenkan-sen, red for Kijun-sen because the fact that when the blue line rises above the red line or the Tenkan-sen line rises above the Kijun-sen line, that's a buy signal. And when the red line rises above the blue line, your Kijun-sen rises above your Tenkan-sen, that's when you're going to have a sell signal. Now, span A and span B, when they cross over one another, they produce a cloud, and that cloud's color is indicative of the trend. So span A rising above span B would produce a green cloud, indicating an uptrend. Span B rising above span A would produce a red color, or red cloud, which would indicate a downtrend. Now, when you get two of these things matching up, that's when you're going to get your double confirmation signal. A lot of you have probably heard confirmation, and don't even know what it means. Confirmation is just essentially saying, hey, this is something that has happened. This is a factor. These are one of my criteria to take a pair long or to take a pair short or to enter a trade, and it's been confirmed by X, Y, and Z. It's good to have 3 levels of confirmation. For us, we use Fibonacci, we use formation, we use catalyst, we use Ichimoku. So we have almost a 5-step confirmation before we get into trades, which is the reason that most of our trades are producing profits, that we're getting into. For instance, I'll show you a gold trade that we got into to end up, but we'll just get into this. So Sunoku, or Tenkan-sen and Kijun-sen, I usually make them a little thicker so I can see them, and you'll see that this is, you'll see all of these clouds here. This green area here is a cloud, red's a cloud, green, all of these are cloud areas. Now what happens is, the thinner the cloud, the more that the trend is starting to weaken. Okay. Now, the fatter the cloud, the thicker the trend. So we can see right here, this is a very fat red cloud. You can see it's just boom right there. It's a fat, long red cloud. That's great. See here is a nice thin, green cloud. That green cloud wasn't thick enough to take over the trend, which is why you can see it took right back over. And we can see that same kind of cloud that was forming back in July, beginning of July into the beginning of August. Well, the end of July, it's really July 25th, July 4th, about 20 days in July. We can see that same kind of movement happening right now, where there's a nice extended green cloud that's not too thick, and it's getting ready for a nice red cloud to take back over, which is why we're very, very bear biased. When I say bear biased, I don't mean this is going to drop 100%. This thing could rise to the moon. Nobody knows. If anyone ever says that they know something with 100% certainty, don't listen to them. Because that's a pride thing. That's them saying that they know what's going to happen in a currency for a country. That there's no way to know exactly what's going to happen until it's about to happen. And that's why at 4:30, 4:30, we're going to be watching these charts every second they move, just because every move that it makes, the way it forms the candle, the way it comes and forms a wick, all of that is very, very, very important. So with this Ichimoku, there's a few different indicators and a few different features of the cloud that are very important to note. So this is your red and your blue line, your Kujinsen and Tenkinsen. And remember, when your blue line crosses above or is above your red line, that's a buy signal. So right here, you can see if we zoom in, you can see that this blue line crosses above the red line right here, and this is where we would buy. We would have bought in right here. You can see that it did trend from this area exactly where the blue line and the red line crossed over. You can see that the pair actually did in fact rise a nice, 104 pips. Now that we're looking at this, we're going to look to take this short. And the reason for that is because the cloud, this bottom cloud here actually serves as a support. Now, you can see it happening here, the cloud serving as a support. You can see it happening here, the cloud serving as a support. You can see it happening numerous times where the cloud serves as a support. So the cloud serves as an area that the price will go to and sit around. Now, once the price enters the cloud, that's when you're most likely going to see consolidation. And we can see that here. You can see this consolidation forming. You can see this right here. There's consolidation that formed once it had entered into the cloud here. You can see it happening over here. Consolidation when the price enters the cloud. Now, if it breaks through the cloud, for instance, right here, once it breaks through the cloud, you're going to get that downward movement. And this downward movement happened to just be a nice 30, 40 pip profit. Now, once we got to the bottom, we can see right here, our blue line did in fact cross over our red line. We would have bought here. You can see here again, the red line crosses above the blue line. We would have sold. Once it crossed again, we would have gotten out of the sell. So this is an indicator that you need to use another form of confirmation for. We see again the blue line crossing above our red line right here with the green cloud, and this here is actually the perfect sell signal or a perfect buy signal. Just exited the cloud, just out of consolidation. This is a falling wedge, so that's the formation. If we would have drawn our Fibonacci in here, I know it's going to get a little clustered, but bear with me. Draw our Fibonacci here, swing low to swing high. We can see that this price did in fact tap the 50, and I'll make it a little thicker for you, and I'll make it white so you guys can see it. The price did in fact tap the 50 right here. Falling wedge, swing low to swing high, tap the 50. After consolidation, a nice pop to the high. We got that buy signal right here, consolidated right to the cloud, popped up. That would have been the perfect buy position, and we would have gotten in right when these two lines crossed each other. And we can see right after that, after they crossed each other here, we would have caught a nice 163 pips. Now we're starting to see that bearish movement. As we're talking in real time, we can see that the price is moving downward. It's struggling to break this area. It's wicking. You can see this wick here. And what we're expecting is it will break. Once it breaks, a lot of people will be getting in short because people that don't have access to this platform, first of all, aren't going to have the convenience of just clicking one button and seeing all the news events. That's one thing. Another thing for people who use other platforms without the news attached to them, or other people who might use Forex Factory, MyFXBook, those different apps and different news outlets, they're not going to want to look at. They're not looking at these things. If they're trading Australian dollar, U.S. dollar, they're most likely. Some people always overlook the news, and these are things that we need to take into consideration and take into our process of getting into trades, because these are big factors. A lot of people say, "Oh, I don't trade news. News is just there to throw things off." And I say, no, the news is there to actually. It's data. Data comes out. It's the same as saying a basketball game or a baseball game or an Olympic event. It's just there to throw things off. It's not going to determine the statistics of that athlete. I'm like, what are you saying? If we metaphorically compare it, that's what a news event is comparative of. It's an event that has a numerical value that's given to a currency. And when they're big events, it's like saying the Olympics versus a training practice. A training practice would be a white event, which is, I don't even have those up here, but they're low impact events. There's tons of them. There's a lot of practices that, there's tons of white news events coming out. And those events really don't have an impact. They're low impact, so I don't even care about them. Medium and high impact news is those are going to be the news events that move the pairs, those 60, 70 pips in 5 minutes. Those are going to be the news events that you want to keep an eye on. And today we happen to have 3 coming out, bam, 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 right after one another. So with that, that's the Ichimoku cloud. The Sunoku line, that white line there, it's really just a barrier line just to show where the price stays. It always is above the price. You'll see that it's essentially just making a shadow of the price. It's almost like a line. If you guys, I'm not sure who uses it still, but some people use line graphs instead of candlestick graphs. That's essentially what it is. It's just to show you where the price went to, where it came from, where it was going. It gives you a smoother representation instead of all of the candlesticks. So I did tell you guys I would show you the gold trades. Let me go over to that. We can see here, we got in here on gold. The reason for it being that we saw a downtrend prevailing here. We used our Ichimoku and we used that there's a previous high that needed to be taken out. And what we did was essentially just come in with our Fibonacci retracement tool. Came right to here, and we saw in this area from the 50 to the 61.8, this was a hot area for this bad boy to keep selling. We saw here, if we come in a little closer from this swing high to this swing low, this is definitely still a hot area to get in, short. So what we did is we just set up our sell limits, and what happened is exactly what we expected. Price comes down, pops, triggers that sell limit, triggers this sell limit, triggers this sell limit, takes all this back out. These are the kind of moves that we're expecting to see on AUD. With gold, the way it's quoted is actually XAU USD. And whenever the US dollar is gaining strength, you're going to see gold being pulled downward. Now, with AUD USD, whenever you see strength in the US dollar, you're going to see it being pulled downward. So gold is a very, 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 very good indicator of what the dollar is getting ready to do. Right now, we can see, let me get this out of here. We can see that there's a nice wick forming on the hour candle. But this really doesn't matter, because if we look at the daily, you can see it's a very, very nice bearish symbol, a nice wick to the top. And this is a perfect case in point of people who use smaller time frames to look at their charts. If you're looking at this in the 15, you're saying, oh yeah, that's a wick. Definitely going to take this to the top right now. It's only 2 minutes until this candlestick closes, and you might get a nice pullback to this area. But we're not in this to get money every 15 minutes. We're in this to get the big chunks daily. We have other things to do. We don't have time to sit in front of charts all day, every day. We're going to come in, we're going to look at this on the hour 4, we're going to look at this on the daily, and we're going to say, okay, this is definitely looking like it's got a long way down. And if we look, we can see that this price has been extended from October to here. Took a nice little, the Brexit gave it a nice little boost right around here, beginning of June, to the top, $173, which is 1,730 pips for gold. And if we take our Fibonacci on gold, we can see that right now we're heading towards that 23.6. So which is the reason we have our buy limit set right here. So what happens is it pops down, we lock in all the profit that's inside of this box here that I'm going to draw up for you guys. All the profit from this area right here, from this area right here, down, lock in all this profit, make it green so it can communicate that we're making money here. And then no matter what way it goes, if it wants to bounce back, we're going to make money off the buy. If it wants to bounce lower, we're going to make money off the sell. We're already making money here. So that's the way that we like to trade, and this is just this is a perfect example of the end result of the Ichimoku and the FFC method, what we're getting ready to do right now with the Australian dollar. But this is what we really like to use, and this is the way that we really like to do things. And this is the reason I have everybody using the X Station platform with Santon Direct as your brokerage, because there's no other platform that I know of that you can come in. You can simply say, hey, I want to see gold and I want to see AUD USD and see how they're correlated. And I want to overlay them and say, okay, here we go. We can see that when gold's falling, AUD USD starts to follow it. We can see when gold's rising, AUD USD starts to follow it. Right now, gold's taking a nice dip, and we can expect that AUD USD will do the same. But obviously, like I said, no one ever knows exactly what's going to happen. But when you start to use all of these different confirmation methods, that's when you start to get into those positions and start to say, okay, you start to realize formations like this, a nice double top. You start to realize formations that are happening with a Fibonacci as well. If you fib from the top to the bottom, you knew that this was a nice area to take it short. Because if we look at the overall trend, this is a downtrend. But if we're looking, closer, this is an uptrend. So just little things like zooming in and zooming out, that's going to help you a lot. Because when you get to see the bigger picture, you get to see where the trend has actually been going, that's going to help you a lot more than saying, oh, okay, well, it looks like it's going up. Let me just follow the crowd. So with that, I'm going to end it. We got about 45 minutes in there. And I'll open it up to anyone who has any questions. If you're not here, you can email me questions at M as in Mary _ Vega, V as in Victor, E as in elephant, G as in girl, A as in apple, at santondirect.com. That's M _ Vega at santondirect.com. You can email me any questions, concerns. We can chat. You can get in touch with me through our Telegram. And I definitely want to make sure that everyone understands this method. It's seemingly easy when you're watching it and you're watching me do it, but to actually go through the process and be able to recognize the trends and be able to know where to draw your Fibonacci's from, and even something as simple as knowing where to find the tools to use on our platform. And if you don't use our platform, I highly suggest you do. It's what we all use, and it keeps things streamlined and universal. So when you have a question, we know that you can. We know you're getting the same. You're seeing the same thing we're seeing. So with that, we're gonna end this, and yeah, definitely just get in touch if you guys have any questions.